All right, Vance. Well, I'm excited to have you on our show today. I know that you've got an amazing background on the investment side of things. You've built a terrific company, and our audience is going to be really fortunate to hear what you have to say. So, with that, how are you doing today?
I'm doing great, Terry. How are you?
I'm awesome and excited to have you on board. And so, I'm just going to jump right in. I know you're a busy guy and you got a lot of things going on. So, one of the things that I'm really curious about is what made you decide to start trading for other people, or was that something that you just sort of just kind of evolved in and started one way and did something different?
It's an interesting thing, Terry. What happened to me way back in the late '80s? I started a waste management company. And I got bought out, and so I had some money. I wasn't wealthy, but I had enough money to have a good stake. I was young. I was 27, and so I went around the country and learned to trade with some of the very best traders anywhere in the world. They were so gracious to share their thoughts and their ideas, and as most people are, if you ask for help, a lot of people are willing to give it. And so I started trading for my own account. And I had a broker dealer was watching what I was doing, and they called me up one day and they said, "Hey, will you start trading for our people?" And I said, "Well, I've never thought about it much." And I said, "Will you pay me?" And they said, "Yeah." And so I said, "Sure." And all of a sudden, it just took off from there. I mean, we started Howard Capital in 1999, and it's exploded up to I guess 4.5 billion now that we manage, moving into five. And you can see our the returns are good. Our risk management quantitative strategies that we use are exceptional. So yeah, it's been a really nice run, Terry.
I'm curious, how did that when you went to these people to say, "Hey, will you help me trade?" What did that look like? I mean, what were the circumstances around that? Because it seems I have I guess the way my head works. It's kind of hard to imagine a guy just walking up to somebody that is a really successful trader like that and saying, "Hey, will you help me?"
Yeah, well, that's an interesting thing, Terry. You're a very gracious, welcoming guy, and you're willing to help anybody that asks for it. A lot of these people that are very, very successful managers and traders are just the same. And when you would go up and you would ask for help, what I did learn from all these people is how number one, none of them were guessing. They were really quantifying out their systems. They had got it down to really where they really knew what they were doing. They knew what the odds of their success were. One of my biggest, I guess, teachers was Ed Sakota, which you've read about in Market Wizards. I learned so much from him, from Wayne Rainwater, another one. But Ed will tell you all of his stuff is mathematically driven, and he's probably one of the most profitable traders anywhere in the world. But you have to use math and take the emotion out of the equation. I started to learn that from working with different people. And so as we started to develop our systems out at Howard Capital, everything reverted back to non-emotional, a repeatable system that was math based, that we were trading odds. We weren't trading emotion. We weren't trading feelings. We were trading what was actually happening. And the more we did that, the higher our returns were, and our risk management was even better, especially in 2002, 2008, in the pandemic, where you saw how much money we moved to the sidelines to sidestep a lot of that.
Yeah, I think that's I've read some of the Market Wizards books, and I was fascinated with this idea that the efficient market hypothesis, which is the basis for the way a lot of people, I mean, a lot of money on Wall Street is invested this way. And in the Market Wizards book, they talk about Schwager talks about how it's simply not true. And I guess did you start out with the idea that efficient market hypothesis is accurate, or did you think it was BS from the very beginning?
I never bought into it at all. And the reason was is I can still remember the '87 crash when the market dropped about 22 points in one single day, or 22%, sorry, one single day in '87. It let me know that the efficient market theory wasn't too efficient or very effective. I mean, when you lose quite a bit of your money. But also, Terry, when you look at a lot of the big institutional firms like Vanguard, they can't be active managers. They are the market. If they, and, gives guys like you and I who are in the 5, 10, 15, $20 billion range to be incredibly active and really trade off their inefficiencies and their beliefs, because they can't, if Vanguard went to cash, they would crash the market, period.
Yeah.
So they literally can't. But you and I get a big edge out of that, which makes our profits go up and up and up and up. And you get people like John Bogle. He's even said before. He said every investor, this before he died, and I have a lot of respect for John. He was a wonderful, wonderful advocate for the markets to do a lot of wonderful things. But he's even said himself, investors ought to be prepared for a 20, 30%, even a 50% drop in the market. Well, that's great, but if you're buy and hold, you just lost 50%. But this gives you and I a real edge to be active in the market and to take advantage of those inefficiencies that Vanguard and these big institutions can't, because they can't go to cash. It's a wonderful thing that we've created.
It really, I mean, I've obviously, our clients have seen your returns firsthand, and so there's no doubt that what you're doing is different and arguably better. What I don't understand, and maybe this is by design, but why do you think these? I mean, I understand a company like Vanguard and Fidelity and others. Um, they are the market. Vanguard in particular, like you've said, and Fidelity's huge too, so they have similar issues. And I guess the big firms, they know that there are people like you out there, at least I think they do, that are having such success. I don't understand why they don't try to mimic that, or have they, and they just can't do it because of their size.
That's an interesting question. A lot of these people who've been so brainwashed and trained that just buy and hold and sit through a nasty bear market, lose 40% of your money, take 6 years to get back to even. That's normal and that's okay. Well, for you and I, Terry, that's not normal. It's not okay because you and I, our money is sitting right next to the people we trade for and our clients' money. So if my money, if we have a 20, 30, 40, 50% drawdown, I did too. Well, that's not acceptable to me.
Right.
I'm not gonna live through that. That's awful. And so when I'm trading money, I'm trading it right with everybody else's. There's the same as mine, the same as yours, everybody else's. But a lot of these institutional players like that, for some reason, they don't seem to care that they lose 30% of their money. But for you and I, for most average investors, they don't want to go through that pain and that suffering.
No, and I, going back to 08, 09, I mean, it wasn't just about the investments. I mean, we were going through obviously the most severe economic downturn since the Great Depression. And it wasn't just money in the stock market. People were losing their houses, they were losing their jobs, they were losing their dignity, really. Um, and, as an advisor, if there's anything I can do to help my clients avoid that pain, it's incumbent upon me to do so. I can't just sit back and, just because the big firms say, well, you have to ride this out and be patient and all that nonsense. I've always struggled with that advice. And I remember in 2000 through 2002 watching the tech bubble, and that at that time I didn't know any better, so I did what the institutions told me to do. We diversified, we had bonds, we were patient, we wrote it out, and it seemed like it took forever. And I lost a number of clients during that process because the results were not acceptable. And I look at what you're doing now, and I wish I would have known you back in the year 2000. My practice might look a little different today. And I guess as I look forward, one of the things that I was hoping that you could do is help our audience understand what the byline is and what makes it so successful and different from other people who are trying to do the same thing.
Well, a lot of people who are trying to, and let me make sure that your audience understands the bottom line is not very active. It's not a very active indicator, so it doesn't pull us out of the market very often. Something has to be severely wrong, and you're never going to know what's wrong till after the fact. So you have to trade what the market's actually telling you, and the market speaks to you very clearly every day. I mean, it's telling us what it wants to do. But you have to quantify that in such a measurable mathematical equation that you can identify where to pull money out of the market and where to pull money back in. But on the buy line, let's just go to that part of the equation. Like in 2000, 2002, when it went negative, well, your odds of making money in a negative market just go down dramatically. I mean, the odds are just not there for you. And I can tell you the buy line is 74% accurate, 20% of the time it's going to be incorrect. But the 26% of the time that it's wrong, it readjusts very, very fast and fixes itself very, very fast. So nobody has a perfect system. We don't either. We can't call tops or bottoms. But like I tell everybody, Terry, all I want to do is keep you at 85% of the good and have you sidestep 85% of the bad. And if you do that, you'll have superior returns and you'll also have stress reduction and live longer.
Well,
So,
that's a quality
kind of
of
like
life issue,
yeah,
right?
yeah. Well, it's kind of like a health food drink for you, the HCM BioLine.
I love it.
Yeah,
So not
keep
only
your
are we getting investment advice, we're now getting health advice from Vance.
yeah.
This is great.
Well, stress is one of the big killers, And by the way, in 2008, when people were losing their retirements, they were having to work another 5, 6, 7 years because of money they had lost in 401ks. That's stressful. That's not healthy.
No, no, and if you look back in 08, 09, on top of everything else, suicides were really high. It
Right.
it was devastating for a lot of families. And it's interesting. On a side note, I think that one of the one of the reasons that crypto has, to some degree, at least the decentralized finance and the Bitcoiners of the world, a lot of these guys are millennials that saw their parents lose their houses and they're looking for something different. So it sparked a movement. I mean, if you go back and like when I talked to my grandparents about the way that they grew up, even as recently as 10 years ago, we would talk about this, and they would their life, even in their 80, when my grandma was in her 80s and 90s, and we have these conversations, the impact of the Great Depression on her parents left a mark on them, even though she was just a little kid at the time. These massive, economic shifts that we go through, they leave a mark. So I think it's really important for, as an advisor, for us to help our clients manage those situations, right, and avoid the pain. And I guess, as you look forward, one of the things that I'm fascinated about is that your system is completely mathematical, but Vance, you're human, right? So do you find that it's difficult for you to kind of step back and look at everything that's going on in the world? And we can talk about the Fed, and we can talk about $30 trillion in debt, and we can talk about politics. Do you find that it's difficult for you to remove yourself from all that in the investment side of things, even though you have a great algorithm like you do?
Not over time. It's one of those things. It's just discipline, 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 and being able to see it work time and time again. And I tell people all the time, Terry, turn off the news, turn it off. All the news does is cause stress, because they're there to sell advertising ads, and the way they sell advertising ads is to get you on TV or on your iPhone as much as you possibly can be, and scare the dickens out of you so you keep showing up. And I don't know what's going to happen with the Fed. I don't know what's going to happen with the world tomorrow. But what I do know is we've got a very, very sound system to move out of the market systematically and mathematically driven, no matter what happens. But we've also got a system, Terry, as you well know, that when the market's going up and we get all this bad news, all this bad news, all this bad news, it holds us in the market to capture those really nice gains. And we don't let things like the news scare us out of the market when we should be in. One other thing that I really do want to talk about just for a second, Terry, is the power of having some sort of a system to reduce exposure to equities and things like a pandemic.
Mhm.
That, our system traded through the pandemic just wonderfully. I mean, absolutely wonderful. We were 65 to 70% in cash the day that the Dow Jones dropped 12% in a day. Do you remember that during the
I,
pandemic?
I was
And
on the phone talking to
yeah,
people. I remember it vividly.
but we were down about a point and a half to 2 points. That's a big difference. And by the way, you can sleep pretty good at night knowing that you're down just a fraction of what the Dow or the S&P or the Nasdaq is, because we've had all that capital on the sidelines. And when the buy line triggered a new buy signal, which, as you remember, was the first and second week of April of 2020, we captured that turn almost perfectly. And so the buy line was telling us what was happening inside the market. It was telling us when to reduce exposure, but it was also telling us when to jump back in and capture the turn in the market and capture those beautiful gains.
Well, I mean, that's amazing. And obviously, we watched in a real time. And one of the things that I'm curious about is the byline started to indicate that there was, we'll call it, some cracks in the foundation of the market prior to that first day. Can you point to anything specific from a technical standpoint that you think that the byline picked up on that, people that aren't using something like that didn't see?
Well, when it changed trends, and trend of the market is very, very important, Terry, and that's what the HCM byline does very, very well, is tell us if the trend's up or down. And when that trend changed, and it changed about the second to third week of February, but you got to remember that January was a very good month going into 2020. I mean, we were looking great, looked like it was going to be a great year, and then all of a sudden the pandemic just started to take over. And a lot of people were like, well, how do we deal with this? Is this just the normal cold? Is this just another flu? And then all of a sudden it got worse and worse and worse. And I can still remember when the byline was turning over, it was right there about to turn over. And all of a sudden, Tom Hanks came out and said, I've got COVID. And boy, then the market really came unwound when we had a celebrity that had this. And so, when we started to reduce exposure, everything we trade, Terry, as you well know, is very, very liquid. Everything that we own, we have to have daily liquidity or we do not buy it. So if I can't get out of it, we won't own it. So our liquidity was just a non-issue. We just hit a button and boom, we were in short-term treasuries and cash. And so that was a really great feeling to know that we'd reduced that exposure as quick as we had. And of course, the more the market bled out, you can almost see us. I hate to say the word frothing at the mouth like a hungry dog, but all these great buys were setting up for us to buy them on the cheap, and we did.
In that moment, Vance, I'm curious because I know, and I listen, the success that you've had makes it easy for you to stick to your system, and it creates more conviction, which leads to better results. So it's kind of a self-fulfilling prophecy long term. But I'm just curious, like in the moment when the byline was telling you, all right, it's time to get back in, and as you surveyed the world around, did you have some, and again, I know you're going to follow the system, but I'm just more talking on a personal level. Did you have some trepidation about, the world is still looking pretty scary, or were you pretty convinced based on what you were seeing technically that the market was just ridiculously oversold?
Oh no, I was scared to death like everybody else. You have to. I mean, I'm human. I feel, but I'm not paid to feel. I'm paid to trade a mathematical system. And as scared as I was, even when we went back in the market. By the way, do you remember the market was still was turning in the beginning of April, but it was still way off from its from its highs clearly. And to go back into the market 100% the way we did is just sheer discipline of following the math. The math knew that the market had turned, that the market was going to heal itself and start to move higher. But you got to remember at that same time, Terry, which was so frightening, is you had the Imperial College over here saying we're going to have 20 million deaths.
Right.
And so clearly the HCM byline knew something that the Imperial College didn't, was that wasn't going to happen, because there's a lot of smart people in the market, very smart people. And when they started buying again, they saw something too. And I'm sure that some others are running algorithms like we do. I hope they're clearly pretty decent, but catching that turn was so important. But yeah, it's very frightening, because you don't know what's going to happen. But what you do know is at that moment in time, the market had turned and it was pointing back up.
What I remember about that time is that, people forget about this now because of everything that's happened. But I remember listening to the impeachment hearings and the whole thing. And I thought it was really fascinating, actually, that it wasn't until the impeachment hearings were done and the decision was made about what to do that it was almost like within a day or two of that, the news media in the world turned its attention right to COVID, or back then it was the coronavirus. And
Yeah.
within a day or two of that, the market started falling. It was an interesting time to say the least.
Yeah, it was very interesting and disturbing. And another thing too, that's not the first pandemic we've had. It's not going to be the last, I can tell you. And and a question out there, not to get too far off into politics, but nobody knows yet if it was man-made or not. Nobody's been able to prove that it wasn't.
Well, I've done, I've done a lot of research on this, or reading, because it's just gotten to the point, Vance, where you don't know who to believe anymore, because the arguments pro and con for anything related to COVID-19 anymore, they're compelling on both sides to some degree. And without being an expert or being right in the middle of the decision making, it's hard to know who's telling the truth anymore and who's not. I just look at it, and this is probably, I think you can relate to this, but and maybe you can refute me if you think it's different. But to me, it's simple: follow the money, right? Doesn't that how it almost always works?
Yeah, and I think that's exactly what the byline does. It follows where the money's going. Is the money coming out of the market? Is the money going back into the market? And it does it without, without feeling. It doesn't care about Corona. It doesn't care about the Fed. All it does is care about which way this market's headed.
Yeah. So, I mean, on that note, maybe you can help us understand. And I know it's a bit of a secret sauce. And so I'm not asking you to give away any trade secrets. But a lot of our audience might not know what an algorithm is, or certainly they won't know what a double exponential moving average is. Is there a way that you can put that in layman's terms to help people understand why your system is so powerful?
Well, when the trend of the market, what we do is we average quite a number of indexes together. So this gives us a real feel for the overall market, not just large cap growth, not just small cap, but the overall market on which way it's going. Because as you know, Terry, when markets want to go higher, usually everything goes up to some degree. And when markets really want to drop, like '08, literally everything wants to come unwound. So what we do is we average those together. Then we have a proprietary moving average that we develop, which measures the equity curve. How is this equity moving? Is it moving north or is it moving south? Once it's moving north, we just stay in the market. We continue to trade hard. On the other side of the equation, when we're trading hard, that means we're trying to find the most productive asset classes to put our clients in, whether it's energy, biotech, technology, financials, whatever the case may be. We don't want to sit in dead money in an uptrending market. We want to find the most opportunities that we can to capture good gains. And then the other equation is when the byline goes negative, we're looking at cash and short-term treasuries. Did you know that in the '29 crash, that if you'd have moved your money to short-term treasuries, you actually would have had a fantastic year?
Yeah, well, I mean, makes sense, right? Because it's a flight to quality, and until the
Yes.
rest of the world decides that the U.S. government treasuries are not the safest place to put money, it just seems like that's where everything's going to go. On that note, one of the things that I've learned, and I've learned this the hard way, is that and I guess I'm asked. This is a question, but I'm also making a statement, and I'm curious if you see it the same way. But to some degree, I'm going to say diversification sucks. In that we're told to own bonds, we're told to own emerging markets, we're told to own all of these things. And when you look at these really big downturns, whether it was the tech bubble in '02 or even more like '08, '09 and COVID, when the market went down, everything correlated nearly to one. And so it didn't matter what you owned. If you didn't have cash or treasuries, you got whacked. Isn't that a fair statement?
I think it's a very fair statement. And one of the big statements that Warren Buffett said is diversification, not diversification, but diversification. And one thing that you'll look at Charlie Munger and Warren Buffett is how they concentrate their positions. They get into a winner and they ride that winner. If you over diversify, you damage your returns because all of a sudden you've got too many losers and not enough winners. But if you're really concentrating your positions in winners, you can dramatically outperform the index. So you've got to concentrate your positions and you've got to really find those opportunities and you got to put enough money in there to make an impact on your portfolio. And the way we do that is by math. But you're right. I love the word diversification because you can over diversify to the point you actually hurt yourself.
What's fascinating to me too is that when we talk about this stuff, it really annoys me because from a regulatory standpoint, that's one of the things they're going to look at is diversification. And I'm curious, from your standpoint, have you run into any issues with regulators coming in and looking? I mean, they have nothing to say about your performance because it's remarkable. But have you had any pushback on a lack of diversification in any of the other areas that you invest money from a regulatory standpoint?
No, not at all. Not at all. Not at all. We trade a lot of stocks and a lot of ETFs, but when you buy an ETF, and let's say you're buying large cap growth ETFs, you got 300 or 400 stocks inside that ETF. So even though it's concentrated in a sector, it's not in one individual stock itself. So we don't have any issues at all with the SEC. They actually, I think, appreciate how we trade.
Yeah, because if you look at any conventional approach to investing, right? And you hear these from all these IRAs and sorry, RIAs and a bunch of other places. It's you can't predict where the market's going, and I think we would agree with that. But your system doesn't predict, but you're taking advantage of momentum and trends, and so the system tells you where to put money. And I just find it really frustrating that it's hard having conversation with clients because we have to undo all the brainwashing that they've undergone from all the major institutions that tell them that they should do it differently. So when someone says to you, for example, you can't time the market, I think that's a broad statement that you may or may not find to be true. But when they say you can't time the market and they question how you've done what you've done, what's your response to someone who says that?
We're not trying to time the market. All we are doing is measuring the trend of the market. The trend is completely different than trying to time the market. So if the trend's down, you just don't want to fight that. Like in '08, when stocks were selling off at such a rapid clip, well, let's just take the pandemic. I always tell the joke about Sam Kennesaw, I think was his name, the comedian that would yell. Do you remember who I'm talking about?
Oh
And
yeah,
he would,
Sam Kinison. Yep, he was nuts.
Sam Kinison. Oh, and
He
he
was
would yell,
awesome.
yeah, yeah. But he did a skit one time, and it always reminds me of this, where the Ethiopians were starving, and he would start yelling, "Move, move to where there's food, move." Well, when markets are selling off at 12% in a day, have enough common sense to move to something that's not losing all of your money. And yeah, I agree with you wholeheartedly. I think they have been brainwashed, but a lot of people are turning the corner after the pandemic in '08 that hey, maybe you don't have to lose half your money in the next bear market.
Yeah, well, so do you see? So as we look into 2022, and I understand you have a math-based system, but I respect your ability to think critically and to observe what's going on around you. And so as we look at the market in 2022, I assume Vance that the buy line is still positive right now and still looks pretty strong. Is that a fair statement?
It is, yes, it is a fair statement, very much so.
So as we get into what we think might be some of the risks that we're looking at, do you have I guess one of the questions I would have is, do you have an opinion relative to inflation versus deflation, which one wins out and which one might be a bigger threat as we move forward?
You will clearly have an opinion. I think one of the bigger risks that we've got going into 22 is going to be inflation. I think that's a big risk that we're seeing. I think overregulation from the government is another big issue, and they're very disorganized, and they're in a lot of different turmoil in DC right now, which is really unhealthy. I don't think it's very healthy for the economy or for us as a local citizen. But another thing that you've really got to be concerned about too is overtaxation. You start
Hmm.
overtaxing some of these things, and next thing you know, you're into a bear market too. If they would have had that 39 or 49% tax on capital gains, it would have crushed the market. I mean, it would just crushed it.
Do you think that the people that are making decisions in Washington right now, do you think that that they really care about the health of the market? People like, well, and I don't want to single out Elizabeth Warren because this happens on both sides of the aisle, but she's been pretty vocal about, she's been online criticizing Elon Musk lately. And, she's always had more of a, it's interesting. I don't know how she serves two masters because on one hand, she talks about how she wants to protect the little guy. But as far as I can tell, she seems to be more interested in protecting her friends at the big banks like Jamie Dimon and the guys at Goldman Sachs. Do you think that they're mindful of the fact that the market is going to drive to some degree who stays in power?
Very much so. I think that's a great question, Terry. I've noticed this over the past, I don't know, 8 to 10, 12 years, is that the market's doing poorly. Who's ever in control of the situation, whether it's Democrats or Republican, boy, their numbers start to really drop because there's too many people now that are invested in the market, especially through their 401k, 403b, 457. As that money starts to drop, they perceive that as a bad economy. And so some of these politicians, they've learned too that if you've got a bad stock market, they can gripe about it all they want. If you've got a bad stock market, they usually are going to lose their seat, or some of them are, and the other side of the other is going to take over. So they watch the stock market a lot more than what we think they do.
Yeah, and I guess on that front, right, as we look into 2022, it's a midterm election year, and we've got Jay Powell seems to be in a bit of a tough spot because on one hand he's got to feign that he's doing something, or not feign, maybe that's not the right word, but he's got to take some kind of action on inflation because of what we're dealing with. But to me, and I don't know if you see it this way or not, I look at inflation, I look at more as a supply side issue than a demand issue. I think as we get into 2022, demand could abate to some degree. And what I'm worried about is the Fed making policy decisions that are counter to what the market really needs. So if they start really pushing for higher interest rates and tightening the quantitative easing and curtailing the bond purchases like they're talking about doing right now, that as they do that and oil prices rise and demand out of China starts to slow down, that they could actually kind of maybe making the wrong decision at the wrong time and push us closer to something that looks like a recession. Do you see that as being any kind of a risk next year?
I think it's a big risk, Terry, and I think that Powell's doing a reasonably good job of walking that tightrope. He did say he's going to raise rates 3 times in 2022, which
Mhm.
was kind of interesting. I don't know why he'd pigeonhole himself to three, but he did say that. And you've got the old stock market saying is three interest rate rises in a stumble. So the market likes to really come out unwound after about three, and maybe that's why he's sticking with three. He did see in 2018 when he overdid it and the market really sold off hard that last quarter of 2018, and I think he learned from that. That you got to be really, really careful on which way you go with this stuff because you can really scare people too far to the edge to where they start jumping off a cliff and kind of losing their minds a little bit. But yeah, I think it's a very big risk. I absolutely agree with you.
Do you think that Wall Street tries to bully him a little bit? And, at the institutional level, do they kind of, I'll say manipulate, push things down a bit to get his attention, to cause him to kind of open the punch bowl back up? Or is that just urban legend?
No, I bet he gets 100 calls a day from the big banks and from the big institutions and from the hedge funds. I bet they wear him out on trying to tell him which way to go. And that's another thing too is he's got to stay true to what he really thinks is going to help the economy and help the American people because he gets bombarded daily with emails and texts and calls like that.
So, as far as the central banks are concerned, this is maybe a case of the chicken or the egg. I believe for a while central banks controlled monetary policy, but now I think that it seems to me politicians are a little bit more in control of the money printing press. Do you see it that way, or is it exclusively the domain of the Federal Reserve?
I think it's a combination of both. But you said something very interesting there. The printing of money. That's another thing that we've really got to stop doing. The more we print money, the less everyone's dollars worth. All of a sudden, your dollars worth 90 cents, then 80, then 70. This is the same kind of thing that happened in Venezuela, where you printed so much money that it has no value anymore. And you went back to cryptocurrencies to talk about the millennials. Well, that may be another currency that actually has a lot of value there if our dollar becomes less and less valuable. So the printing press has got to stop sooner or later. You can't just continue to print money and continue to print money and continue to print money and think that your dollar is going to hold up in value. That's a very big concern to me.
Well, I've done a lot of reading on this, and Vance, I'm sure you know this, but 40% of all dollars that have ever been created have been created in the last 18 months. So, I mean, to your point, we are printing like crazy, and if the money is a pie, the piece of pie that we each get keeps getting smaller and smaller. But the flip side of that is, maybe we're past the point of no return. I mean, in 08, 09, to me, it's possible the central banks look around and said, oh shit, we've actually gone too far. We've got too much debt. We can't impose austerity because the world won't take it. We're not going to reverse lifestyles by 40, 50, 60, 70%. So they went the other way and they decided, particularly in the United States, they just said, screw it. What we're going to do is we're going to debase the currency over a long period of time. We're going to get to the other side of the baby boomers who've consumed the Social Security, consumed Medicare, built up the debt. And then eventually we're just going to pay this debt back in funny money. And maybe by then we'll grow asset prices so great that GDP could theoretically be, debt to GDP could get back to, a reasonable level. Is that a possibility for you?
I do. I don't think it's going to happen anytime soon. I think it's going to take a real catastrophic crash or a catastrophic economic event to change the mindset there. And I think what will happen then, we hope anyway, is that voters will be astute enough to realize we need to put people in the Congress and the Senate that will make powerful economic decisions that benefit us all in the long term, not these that continue to feed social programs that we can't afford and that it just continues to run up the debt. I mean, this $2 trillion package that's being voted on now and tossed back and forth, and thank goodness, Manchin is in there with a voice of reason to at least make people think about this stuff. You can't continue to print money and run the debt up the way we are without sooner or later catching up to all of us. I read the other day, Terry, that each and every one of us have approximately $220,000 is what we owe as a part of our debt to the United States right now. That's us. You owe 220,000. I do. Everybody on this call owes 220,000 because of the debt they've run up.
I mean, it's the numbers are absolutely mind numbing. And what's really frustrating, Vance, is that when you look around, you mentioned about politicians that have some sense of fiscal responsibility. I mean, when you look at the people that are running for office, this jacked up two-party system isn't working. And it doesn't matter which side of the aisle you're on because the debt got run up in both parties. Isn't that right?
It absolutely is right. Both are guilty. Both did it. But it's going to have to quit sooner or later because there is a day of reckoning, and that day of reckoning, you better hope you've got something like the HCM byline on your side.
I love it. So, let's talk about crypto and blockchain for a second. I know you know who Kathy Wood is, and her ARC strategy, and there's a lot of opinions on how successful she will be long term. She sounds a bit of a cheerleader to me in terms of some of the things that she's out there talking about. I don't know if she's spot on or not, but have you thought about trying to create some kind of a strategy around either exclusively exponential technologies or blockchain, where you've kind of carved out a separate strategy devoted to specifically something like that?
We've been working on that for some time, and I'm not ready to do it yet because the liquidity is a little bit of an issue. I really wish there was 8 or 10 or 15 ETFs that you could trade that bundles those up for us and gave us the liquidity that we need, that we could trade that in an efficient way. And they also need one that's a short, that actually sells short the Bitcoin too, so that you can make money on both sides of the equation, or you can hedge your bets either way you want to do it. because as you well know, it's a pretty volatile investment.
Oh, it's crazy. I
Yeah.
mean, it's you mentioned the 22% drop in 1987 on Black Monday. That's a day in the life of crypto. I mean, I've
Yeah.
seen
Yeah.
I've seen 35% drawdowns in one day on
Yeah.
some of the not on Bitcoin necessarily, but on Solana or any of these other smaller cryptos that now granted, I mean, if you have a 35% drawdown in one day after a 400% or 800% return, who cares?
Yeah.
No, there's that element too, and this is for the record. This is not an endorsement of crypto. I'm not telling anybody to buy crypto. Vance and I are just having an intellectual conversation about the markets as a whole. None of these are recommendations of any kind, so I want to make that clear. Um, Vance, have you thought about the blockchain? Do you think we're going to get any kind of ETFs beyond this futures-based garbage that they gave us this year in the next 6 or 12 months?
I don't know about the next 6 or 12 months, Terry, but it's coming. I have no doubt it's coming. That's kind of the future. It is what it is. And to be quite honest, there is some sort of a comfort knowing there is another currency, so to speak, out there in case our government officials screw up the dollar so bad that it doesn't have any value, which I hope they don't do. So there is comfort in having different cryptocurrencies and other exchanges and other ways that we can buy and sell goods.
Are you concerned at all about the push for central banks to develop their own digital currency and move to something like a surveillance state like they're doing in China?
Scares me to death. That's absolutely is not what you want in this world, in this country. It's just terrible. I don't want to have people. Look, I live a pretty boring life, to be quite candid. But as boring as it is, I sure don't want people peeking in my window every 10 minutes. I mean, that's just not the way I want to live. And and all this stuff too, Terry. Some of it is go tell on your neighbor. That's that's nauseating, to be quite candid. And it's a lot of this woke millennial stuff that these people think that that's okay until they do it to them.
No, it's
I did notice one thing was very interesting on these the smash and grab thing that's been going on. They're running into retail stores, breaking into their cabinets, stealing jewelry or whatever they're stealing. Is that when it started to happen to one side of the political spectrum that's been let these people run rampant, it started happening to them. All of a sudden, they were back into back in the blue and the police. And it's sort of interesting when it starts to happen to them, they change their mindset. And we're starting to see a lot of this, especially in different political arenas, that if you're not safe, what's the point in having money? I mean, if you can't walk down the street and feel like somebody's not going to hurt you or shoot you, or then what's the point in building wealth or creating a lifestyle that you can enjoy if you don't have some safety?
I mean, you have to build an escape pod at some point, right? If you, it's remarkable to me. And I know this whole. I mean, what's when you look at the way the pandemic has kind of played out, in the beginning, the we'll call the authorities, the experts, they could tell us whatever bullshit they wanted to because there was no experience for us to make the comparison to. And we live in a society right now where there's a group of people that are just going to kind of be a little bit sheepish. They're going to follow whatever they're told, whether they watch certain, it doesn't matter which side, whether it's Fox or CNN or anybody else. It happens on both sides of the aisle where they're just going to blindly believe what these people tell them because they're on TV or they seem to be in a position of authority. But we're getting to the point now where people have real world data, even though they're not necessarily getting, it's not easy to get access to the data. You have to look around for it right now. But we're getting to the place where people can start comparing what they were told and what's really happening. And I think that doesn't bode well for the side of the discussion that's really been misleading people. And I'll give you a great example. My wife and I, Vance, had this discussion. My wife, she just got off a month of a really tough bout with COVID and pneumonia. And on Thanksgiving, I had to take her to the hospital because her pulse ox was down around 92, 93. And while I didn't think she was in imminent danger, the problem that I had is she wasn't getting better. Okay. And it was scary because when you're watching the pulse ox like that, you don't, and about pneumonia, it's that's when things can take a turn for the worse. And my wife is healthy. She doesn't have any comorbidities. She's a runner. She's an endurance athlete. So she had a lot of good things going for her. And so we got through that phase, but it left a mark, right? And I'm not talking about so much a physical mark, but a psychological mark. And so today she, and this is crazy. She sees something on Facebook where the University of Michigan was turning people away and sending them to other hospitals that had COVID. Okay, because they were overrun and they didn't have any more room. Well, she has a group chat. She puts it in the group chat, and one of the other girls in the group chat said, "Yeah, I'm at University of Michigan right now for something else. That's not true." And my wife's like, "Are you sure?" So she called the University of Michigan and asked if there was any room in the emergency room and are they still taking COVID patients? And they said, "Yeah, I don't know where you heard that." She heard it from a Detroit News article that was posted online on Facebook. And this is where we're at. It's now people are starting to question what they're seeing because they're being fed misinformation. How do you think this all plays out?
Well, it's almost to the point of being propaganda at this point. And I think that the news media universally has lost so much credibility. Most people aren't believing what they say. Denzel Washington had something interesting he said the other day. He said, if you don't read the news, you're not informed. But if you do read the news, you're misinformed. And I thought, well, that's a pretty good statement. That's about where the news media has gone. And it's almost to the point it's getting criminal. And I
I
don't think,
actually think it is criminal. I
yeah,
mean,
that hurts people. That could hurt somebody.
have you? I'm sorry, Vance. Go ahead.
Well, so, like with that fellow posting that, saying that the University of Michigan isn't taking any more COVID patients or somebody who's sick. Somebody might have read that and they didn't go, and maybe things got worse for them. That's not right. That's a criminal act, I think.
I agree with that. And yet, we've seen this over and over. I just saw, not to turn this into too political, but it's just really frustrating because I don't understand this, right? I don't know if you saw this or not, but as I understand it, and again, I have no way of validating this, but it appears that Adam Schiff just changed the words or deleted something or altered text messages that he reported as evidence in the January 6th issue. How do these people continue to get away with that?
Well, that's a good question, and I think it's up to us as the citizen to vote these people out. I mean, if they're not going to be candid with us, then they can't be trusted with our affairs. And people forget too: a congressman, a senator, a president, they're our employees. They work for us. They're our employees, and a congressman's on a 24-month contract. We can renew that contract, or we can pull that contract. And we need to start pulling more than we renew.
Yeah, I would agree with that. So I assume you're an advocate for term limits?
Absolutely. I don't think anybody needs to be up there for that length of time. I think it's bad for the country. I think it's bad for the world.
Yeah, I mean, the firm that I work with, this firm that helps me, with some marketing and just strategy, I asked them to do a little research paper for me, and they found out that, because I wanted to know how big the size of government really was. And we've got about 4.5 to 5 million people that work directly for the federal government. But there's another over 4 million that are contract employees. So when you look at the size of the government, either directly or indirectly, Vance, it's over 9 million people are getting paid from the federal government to do their job.
Yeah, there's a lot of hands in the cookie jar. I can tell you that.
Yeah, it's really frustrating. Well, you've been really generous with your time, and you're one of the smartest people I know. And so I could pick your brain all day. But I know you've got time commitments, and so I don't want to take up any more than what's fair. So I'll just ask you one more question. As you look at 2022, on the whole, are you bullish or bearish right now? Looking into the crystal ball.
Looking at the crystal ball, I'm bullish going into 2022. The byline's positive. There's a lot of cash on the sidelines. I think that every investor should expect a good, solid, sometime in 2022, a 10 to 12% correction. I think that's in the cards. I think it's going to happen. I'm not saying that's going to turn the market over into a bear market, but I'm saying you need to be prepared for it. Yeah, but going into 2022, I am bullish.
Well, that's encouraging because you look at there's and this is the thing about how the market works, right? Is if you listen to the headlines, there's all kinds of reasons to be a little bit, concerned about where things are going. So it's really nice to hear, a more positive, upbeat perspective. And I assume last question, I guess, kind of tied to this is if it's only a 10 to 12% drawdown, that's probably not something that the byline is going to act on. I'm assuming.
Very seldom. Usually that's just a normal period of consolidation. And we tell everybody as long as the buy line's positive, you buy every 10% correction you can because it just gave you an opportunity to buy cheap stock.
Well, that's sage advice, and obviously it's worked out well for our clients. It's worked out for Howard Capital. It's probably worked out well for Vance personally too. So Vance, I really appreciate the time you spent. Thank you so much for lending your giant brain, and I look forward to having another conversation like this in the not too distant future.
Well, thank you, Terry. I feel the same way about you, and thank you for the very, very kind compliments. And it's always a pleasure to be on your show. You're one of the top advisors anywhere in the country. I think your clients have a real treat, and having you as their advisor, I think it's just wonderful.
Well, that was very kind of you to say that, Vance, and I look forward to our next chat.